Ladies and gentlemen, welcome back to the channel. What we're going to do in this video is go over your broader market catalyst. So earnings, yes, we'll talk about Tesla earnings for a little bit in this video, but other earnings as well. We will take a look at the economic calendar, some of the catalysts that we have there. On Tuesday, we're going to have a speech from Powell, and what Powell says could get very interesting. But I want to start this video with saying, don't be surprised if Tesla stock rallies heading into earnings. Now, ultimately, it's 50-50. Like, the stock may rally, it may not. But don't be surprised if it does. We'll talk about, in the back half of this video, why I think Tesla stock could actually rally heading into earnings. And my view, rally even harder, much harder, after earnings. So let's go ahead and get into all of this information. Hit that like button and subscribe to the channel. You guys already know the dealio. If you want to come find value in small cap companies with us and look for those 10, 20, 30, 40, 50x opportunities over the next couple of years in this AI revolution with core themes like AI, energy, robotics, a little bit of crypto thrown in there, as well as biopharma, check out that link down below in the description of this video. We are going out finding value in companies before Wall Street does, like IONQ at $7. Today it's in the 40s. Applied Digital at $3. Today it's in the 10s. Novartis Semiconductor at $2. Today it's $7. HIMS at $17. Today it's $55. Nebius at 22 or something like that. Today it's in the 50s, right? This is something I've been doing for a long time. We've launched this program with already seeing incredible success. I just want to show you guys, this trading portfolio, this community portfolio is up 80.30% year to date. And some of these positions are up 59%, 16%, 41%, 32%. Others are up in the 30s to 20% range. And I think we're just scratching the surface in terms of what that community is going to uncover and some of these opportunities in the stocks that we are investing in. This is an AI revolution, and there is millionaires to be made. And that's the idea. So check it out if you guys would like to. Link down below in the description of this video. I do have to shout that out in damn near every video because I do not take sponsorships from other firms that want to pay thousands of dollars, tens of thousands of dollars to have me sell you on BS that I would never use personally. And that's just not in my code of ethics or morals. But let's get started. Now that that is out of the way, in this upcoming week, we are going to have a bunch of earnings. Starting off tomorrow morning, Verizon, Domino's, Cleveland Cliffs, Roper Technologies, Ryan Air, and some others. In after hours, NXP, that is a major supplier to Apple. So that could give you a little bit of an insight to what Apple could report. Again, NXP has good numbers. It's going to raise the odds of a good report from Apple as well, although, again, not guaranteed. Steel Dynamics, AGNC Investment Corp, Calix, Crown, and some others that report Monday and after hours. Things really get rocking and rolling on Tuesday. Lockheed Martin, Coca-Cola, Philip Morris, DR Horton, GM, RTX, KeyBank, and some others report Tuesday morning. Tuesday and after hours, Intuitive Surgical, SAP, Enphase, Capital One, Texas Instruments, and others. Wednesday, pre-market, GE Veranova, Amphenol, AT&T, Thermo Fisher, Fiserv, General Dynamics, Hasbro, and Next Era Energy report. Wednesday and after hours, Tesla, Alphabet, ServiceNow, IBM, Chipotle, QuantumScape, Alaska Airlines, O'Reilly Auto Parts, Molina Healthcare, and United Rentals. Thursday, pre-market, American Airlines, the Blackstone Group, Nokia, Dow, Southwest, Flex, Union Pacific, NASDAQ, Keurig, Dr. Pepper, and Honeywell. Thursday and after hours, Intel, Newmont, Deckers Brands, Scholastic, Boyd, and Coursera. And then Friday pre-market, Centene Corporation, HCA Healthcare, AutoNation, Charter Communications, Boots Allen Hamilton, and some others that will also be reporting. Now, in the trading economics calendar, coming tomorrow morning, you have the CB leading index month over month. You have a 3-month and a 6-month bond auction. That's pretty much it. On Tuesday, you get a speech from Fed Jerome Powell. So Fed Jerome Powell, what does he say about Trump potentially firing him? He's probably going to say he doesn't care about politics. He's serving the public. He's doing his job, which is probably what the markets want to hear at this point, not that he may step down. So if he does kind of say that he's thinking of stepping down or something along those lines, which I don't think is likely but possible, that could have negative ramifications for markets. You will also get the Richmond Fed Manufacturing Index at 10 o'clock in the morning, manufacturing shipments and services revenues. Now, I will say with Powell as well, does he kind of change his stance to be maybe a little bit more dovish? That's what I would hope to see. That's maybe from some of the cabinet officials putting pressure on Powell. Now, I don't think Powell is as hawkish as people think he is. I think Powell's kind of a dove. I think he wants to cut rates, but he's just basically the front guy for the Fed, right? Like, not all of what Powell says is his exact thoughts. He kind of tries to align with the average view on the Fed, and some Fed officials are a lot more, what I would say, hawkish than Powell. But again, just my opinion. I don't know them personally. On Wednesday, you have existing home sales for June expecting around 4 million, and that's pretty much it. On Thursday, you get the ECB interest rate decision. You get some other things that will be coming out, like Chicago Fed National Activity Index, initial jobless claims, ECB press conference as well, Kansas Fed Composite Index, Kansas Fed Manufacturing Index, couple bond auctions, like a 10-year TIPS auction, that is Treasury Inflation Protected Security. So kind of inflation break-even metric, if you will. The last auction was 2.22%. So remaining still in line with something you'd consider normal. On Friday, we will get durable goods orders month over month. The last month, it was up 16.4%. You're expecting this to fall 11%, okay? As long as you don't have an even larger drop than that, I think you're good. The expectation of negative 11% is already on the really high side. Like, you're expecting quite a drop there. So I think the odds are you could come in a little bit better, and I think the markets would really like that. But again, keep in mind some of the seasonal trends that we have talked about. It could bring some weakness around the August 1st deadline unless we start to get some constructive trade deals and we can say, okay, Europe trade deals out the way. Canada, Mexico, not really an issue at this point. China's not really an issue. Great. At that point, the August 1st deadline doesn't matter anymore once a trade deal gets done with Europe. The then question will be, what about the Russia, tariff situation? Okay. Is Russia actually going to end the war by the deadline, which is about 50 days, 40 or so days out from now? I think it's a little too early to get bearish on this right now. Again, with a strong July seasonals and just getting into earnings season. But after earnings season, early August could be a little shaky. We kind of seen with Nvidia recently that even if you report a great report, you may have already priced that in. So I think some areas, like maybe smaller cap companies, could do okay, certain industries, but perhaps the headline S&P could go up a bit more from here. I think we could actually power higher to 650 if earnings are really good, and then get a little bit of that consolidation and some downside pressure again, just because a lot of big tech stocks have priced in good earnings. You're going to have to get some surprise good news from some of those earnings to continue to really get this acceleration higher in markets. Even though I think stocks under the surface could do well, if big tech doesn't do well, it's going to drag down the broader index. Okay? Which, again, I think earnings are going to be good, but are you going to get that wow factor? Are you going to get that factor of, within some of these big tech earnings that really moves the stocks higher in any kind of huge way? Probably not. I think it's going to be up 4 or 5%, down 4 or 5% for probably all of your big tech stocks. Does that really, do much? Probably not. I think you're kind of more skewed to the downside just because of how much those stocks have run so quickly. But again, as we get closer to the end of this year, after the seasonal volatility we tend to get in August, I do think stocks are going to go through a pretty aggressive run into the end of the year, because I don't think we're going to have inflation from tariffs. I think geopolitical tensions are dying down. I think trade deals are getting resolved and the trade war will be largely ended by the end of this year. I think the economy is going to hold up and we're not going into a recession. I think some aspects of the big beautiful bill, like the larger deficits, are stimulative for markets. The no tax on tips, no tax on overtime is huge for the consumer. And the 100% capital expenditures write-off is also massive, that Wall Street is really underappreciating. Okay, that means companies can go out and invest again, right? They can go out and invest, and that's going to be a big driver for the economy. Now, I also think if real estate can start to move again as rates come down, that could put some pressure on home prices. But there's so much equity in homes, even if more supply comes next year, I don't think prices are going to go down all that much. And people are going to be able to actually sell homes and take a lot of money to their bank account. So I think next year consumers could be a lot stronger than people think, because consumers have really been in a recession for many years. And if we could see the consumer get a little bit better next year, that's obviously going to be huge. And then the sixth kind of thing I'm bullish on, really over the next decade, is the AI Cold War with China. We are in an AI Cold War with China. This means we're going to have to see innovation. There's going to be innovation at warp speed because of this competition. Not just a competition versus China. There's that going on. U.S. firms don't want to fall behind China, but you also have this like internal Cold War going on with all the other companies. Like, I mean, if you're a company right now, like, there's someone coming after you, especially even like something like Google, right? Seems like all AI companies are like coming after Google's throat right now. Like, Google's going to have to innovate. They're going to have to invest a lot. They're going to have to, go full steam ahead. And I don't think even if we were to go into recession, that's going to change. Right? And that's a driving force to keep us out of a recession. So I really struggle right now, if you want my honest opinion, on trying to find a bear thesis for this market. So in my view, that's either going to be the crux, that I'm just massively missing something, or it's going to be the thing that makes me incredibly rich, right? Is by figuring this out before Wall Street does, positioning for it and being correct. Okay. I have been a bull since the 20% lows in the markets. I was calling for 700 by the end of this year on the SPY by, late April, early May, as things really turned around with the trade war. Okay. At the time, it was like 25% upside. Now it's only like 11% upside to get to 700 on the SPY. And I do think that is achievable by the end of this year. Some people are starting to get on board with that. But a lot of Wall Street is going to continue to chase this market. After all, a new bull market just started from the view of Wall Street. After getting that 20% decline and breaking prior highs, you're only 3% into a new bull market, if you want to think about it like that. And historically, we've had 5 instances of markets falling 20% or more, or close to 20% or more, and then recovering all of that within 3 months, which it just happened. The only other time it happened faster, I believe, was 1999. It may have been COVID, but this was one of the fastest V-shaped recoveries you have ever seen in a 20% decline. And it usually leads to an over 20% additional return over the next 12 months. You're only up 3% right now. Theoretically, if you go up another 17%, you're looking at the SPY somewhere in the neighborhood of about 730 or 740 by the end of next year. But I do think a lot of outperformance could come from the smaller cap areas, some of the value areas within small cap, AI, energy, robotics, and biopharma, some of the main themes that I am focusing on right now in the trading community. I think some of those areas could really, really outperform. Also areas like Tesla. I think Tesla is going to be a big winner over the next 12 months or so. But now, Tesla stocks specifically, there's a couple things I want to point out. Number one, we've talked about this, but the options market, the options chain, by this Friday's expiration, so Tesla's earnings are on Wednesday, as we discussed, but by Friday, you're only pricing in an 8% move for the stock. So I think whether you are a bear or bull, there is opportunity to at least move double that. In my view, again, I'm not a financial advisor, I'm not a financial planner, but if you think the stock's going to have a good earnings, I think it's going to go up more than 8%. If you think the stock's going to have a bad earnings, I think by Friday the stock's going to drop more than 8%. That right there shows me I think there's opportunity here. Like Tesla is pricing in a similar percent move as other big tech stocks, right? It's not pricing in the outsized, Tesla volatility yet. So I wouldn't be surprised if Monday and Tuesday, the options prices themselves go up as more implied volatility hits the chain, because typically like Tesla prices in 12 to 14, 15% before earnings. Now, there's a lot of people that are bearish on Tesla. Okay. And typically when a lot of people are bearish on a stock like Tesla, usually that's when Tesla does very well. Now, I am always under the impression 24/7, 7 days a week, 365 days a year, that Wall Street knows things before we do. Okay, they just do. There's insider trading. That is the norm. They have information before we do. So odds are Wall Street's going to know that, hey, Tesla's going to come out with okay numbers, so-so numbers. Model 2 is coming by, or Q is coming by the end of this year. Like Model Y L is coming. Model 3 Plus is coming. Kind of status quo. But I think they're also going to sniff out that Elon's going to give us some pretty optimistic guidance for robotaxi. After all, Elon just said on his X account, he's basically going all in at AI at all of his companies. Tesla, XAI, SpaceX, right? So I think Wall Street's going to have to kind of get even to like a neutral stance on Tesla's earnings, right? I think Monday and Tuesday could be swinging from like, if this is bearish, this is super bullish, swinging from like here, maybe to like here, getting back to a more neutral place before earnings. Now, couple things on a technical basis as well. In the last week, the MACD just went positive. Typically, you don't have a positive MACD and then go negative right again, right? Typically, when the MACD goes positive, it stays positive for a period and goes through an upside momentum swing. Okay, so I think this is personally going to last till after earnings, probably until the beginning of August, in my view. I think you're going to rally after earnings and continue to rally. I think the stock could be in the 400s a lot faster than most people think. Okay, that's me putting my neck out on a line. Again, I'm not a financial advisor, not a financial planner, blah, blah, blah. Contact a financial advisor if you need help or don't understand any of the information that is being discussed in this video. Also, I will mention that we were getting a lot of rejection ever since really, the if you will, the gap down on July 1st when Tesla broke below its 50-day moving average. It actually gapped down, it gapped up again, gapped down again, and then has made this rally ever since. You're finding a lot of resistance around that 50-day moving average. Even like every day of last week, Monday, Tuesday, Wednesday, Thursday of last week, getting rejected at that 50-day moving average. But Friday, you powered higher. Friday was a clear break of the technical resistance around that 50-day moving average. You're also at this trend line that I've had drawn on the charts here. I think that 333 level is critical. If you can get above that, by Monday or Tuesday, you could be hitting this trend line here in the low 340s or so. So I'm not expecting like a 20% rally on Monday and Tuesday, right? That's not what I'm saying. I'm saying the stock could be going higher into earnings. And then I think after earnings, it's going to, obviously explode higher. Like Tesla stock is down, even though you've launched the robotaxi network. Like that a couple of years ago would have sounded crazy. People would have said, Tesla launched the robotaxi network and the stock's not up like 50%. That's crazy, right? Again, because Wall Street is not convinced of what AI is going to do for Tesla. And I think this earnings, they're going to have to start taking it a lot more serious. And, well, I think that's where you get the large move. You also have a lot of these green circles here. These are technical indicators that are screaming the stock looks bullish here, like the momentum, the Williams percent R, the moving average convergence, divergence, the MACD that actually signaled again on July 16th. You have the price crosses the moving average here. That was the 200-day moving average. And then even on Friday, the price crosses the moving average. Again, that moving average, 50-day moving average. I believe it's the 20-day moving average here as well. And then price actually crossed two moving averages, the 50-day and what looks like the 20-day moving average on Friday. So like there is very clear technical signs that say Tesla stock is probably going higher into earnings. Elon Musk again said he's back 24/7 basically working at Tesla, and mix that with Elon saying he's again going all in on AI that he resisted for a while could lead to a pretty optimistic Monday and Tuesday. But again, we will have to see. I do have trades on Tesla to the upside ready to capture this. So I am biased. Keep that in mind. But again, with that said, let me know your thoughts on this down below in the comment section. Check out that link down below in the description of this video for the trading community. You guys have a great rest of your day, and I will see you in the next one.